Hello, Oracles. Well, I'm going to piece this together for you guys. I'm still unpacking quite a bit from my move. Thank you guys for all of your patience. I'm going to try to get some videos put together, try to clean things up and get the studio fully set up, but I figured I'd get something out because we had some big stuff going on today with Tesla. So we had Tesla dropping below $200 per share today. So that spurred on a lot of questions from people over on X and on social media asking me, hey, what gaps do we have below us from here? Now, I know many of you are very excited that we've dropped below 200 because we can buy a lot more for less. I've been talking about us dropping below 200. Some people didn't think it was going to happen. I had a feeling it would. So today we're going to discuss what gaps we could potentially be seeing down below us, how much further down we're going to go, why I think we may be coming down a little bit further from here, and what I think we could be seeing over the next 6 to 12 months. So we'll get into all of that in just a minute. All right, so looking at the charts, again, we closed at 197.36, down almost 5%, down 4.8% on the day, dipping down about another 0.5% after hours at the time of this recording. So the low for the day was 194.67. We do have this giant gap up here that goes up to 242. This is from earnings. So we had the earnings that came in at the miss. So we expected this gap down, and sure enough, we got it. So now from here, what could we potentially see? We've got an RSI at 25.22, very oversold. So from here, I am expecting us to kind of slow down and consolidate because typically 3 days afterwards, you get the sell off. Over the weekend, we got some news about Hertz having some issues with their vehicles. These Teslas coming back a lot more damaged than they expected, so a lot more work going into these vehicles. So the question is going to be, what does this mean long term? I think long term, it's not going to mean anything. Hertz is very smart. EVs are going to be the future. They're going to figure this out. But near term, it's going to expand some of the frustration and fear that we currently have. We also got BYD presenting their Q3 numbers that were very good. This is leading people to believe that Tesla's superiority over in China isn't as strong as it had been. So we've got a bunch of different things that are coming out, and you can call it FUD. It is realistic information, but is it really truly going to affect them long term? Personally, I don't think so. But in the near term, we could get some ugly stuff going on. So from here, I think we're going to end up coming down further strictly because of the fact that we are getting all of this information. Elon has said it. We've gotten it from other EV manufacturers as well, stating that interest rates being as high as they are putting a lot of pressure on these EV companies. It is making it very difficult for consumers to make purchases. We do have the EV tax credit coming off at the time of purchase in 2024, but that's still 2 months away. I think that is going to help things, but at that time, who knows what else is going to be going on in the macro environment? There could be people out there struggling. Maybe we hit a point where we have unemployment going up, causing a situation where it's more difficult for people to purchase these vehicles, even with the EV tax credit coming off at the time of purchase. So we don't know what's going on. We have the Cybertruck coming out at the end of the month that could give us a nice little pop from excitement, but I don't think any pop we get is going to be very long. I think it's going to be a short-lived exciting pop and then come down. So I do think we're going to see a dead cat bounce going for probably the next 6 to 8 months going on. Now, the market does look 6 months ahead. So I think once the market does start to see that the Fed is looking to pivot on their interest rates, we could see maybe the bottom hitting that point and then starting to feel it out and then come out from there. But again, the Fed hasn't given us clear signals as to timing on things, especially as we get closer. So I think the problem we may end up running into is even if we hit springtime, assuming the Fed's going to be pivoting in the fall, maybe they're not going to be as clear with their information at that time and say, we're going to pivot when we feel it's correct, when we feel it's right, but not give us actual timing to mean that 6 months ahead that the market usually looks might not actually be the fall. Who knows when it's actually going to happen? Again, a lot is going to happen between now and then, but in the meantime, we'll take a look at what gaps we have below us that we could potentially fill. So again, the two that we have above us are 242, and then we have this other one up here to 289.52. Now, this is what I look at here. So I don't want this video to come off as being bearish or anything like that. Again, I'm very bullish on the company long term. And when I look back at what we saw in 2022 with gaps that were far down below us, that people thought we were never ever going to hit again. It took 2 years, but we ended up filling those gaps. I have a feeling these two gaps here could end up being the same thing. Not saying it's going to take us 2 years to get back to this level, but we may drop down a bit further and think we're never going to come back up and fill these gaps again. The moment you start hearing bears talking about how these gaps up here are never going to fill again, that is when you know it is time to buy heavier because that's the time we're about to turn around. All right, so now looking further down to see where the gaps are, there's a tiny little gap here at 162.95. Below that, there's a gap at 146.41. Tiny little gap down here to 133.51. Tiny little gap down here to 122.63. And then the bottom gap that I'm looking at is 114.39. Now, I would go back further to show you the further back gaps. Those are a few years old. And if I try to do it on this chart here, it's going to completely flip the entire thing back to 2013. So I'm not. But there are 5 different gaps that go below 100, one of which goes down to $57. I don't think we're going to get there unless we get an extremely massive macro issue that is going on that causes the entire economy to completely collapse. Is the only way I think we're going to get below that. However, in the meantime, depending on what we see going on, if we end up getting into a recession next year, 114 for me is still on the radar. It never left. I always thought 114 was a gap we were going to potentially fill, and it is still there. So again, we just have to wait and see what the market is going to give us. And for me, again, I'm already starting to add again. You guys know I sold some shares with a stop that was put in around the 266 level to protect myself. But from there, I got stopped out, ended up selling out 13 shares. I still hold 60. I am not going to be selling any more. But now that we're under 200, I will be adding more. So I'm now only adding $5 every week for right now, because again, I don't think this stock is truly going to turn around for real until we know for sure that the Fed is going to pivot. And again, I'm not being bearish or anything on the company. I think the company is great. We have much better financials now than we did previously, despite the fact that we did see a miss. We're seeing lower numbers quarter over quarter, but that is strictly because of the fact that we have the interest rates being so high. They're not going to be this high forever. Eventually, they are going to turn around and come back down. When that happens, the stock is going to turn around and we're going to see the opposite going on as we are seeing right now. That's all it is. But that means that we are going to be basically getting ourselves this nice window of buying opportunity. I know Peggy out there has been waiting for this moment. He's been buying very nicely. I, again, am adding back myself. And there's a lot of people who have been waiting on this. Gary Black over at his future fund, they sold up around the 265 level as well, and are now waiting to see what is going to be happening with interest rates and other information to start adding back in also. Again, Gary is not bearish on the company. He's very bullish on the company long term, but in the near term, there's a lot of stuff that is going against them. They've got a lot of headwinds that they have to face. So, what is actually going to be happening? And for me, that's the buying opportunity. I'm still adding more and more to my dividend plays. I'm going to make a whole separate video about all of that because I've had a lot of people asking how I've gotten myself from where I was at the beginning of this year at barely anything, about $400 annually, to almost $10,000 annually coming in right now. And that money is what I'm using to purchase more Tesla stock. So that is why I want to discuss with you guys in a longer video once I get this whole studio fully set up again. But in the meantime, this today was very pertinent information. I wanted to share with you guys all of the gaps that go down below. Now, again, those of you who are newer to the channel, gaps fill 9 out of 10 times. They do not have to fill. We do not have to go that low. There's nothing in the rule book of investing that says you have to fill these gaps. But when you look historically, gaps do fill 9 out of 10 times. And again, we're starting to look at the Fibonacci starting to retrace its steps going down. We're starting to see a lot of things in the charts, and we're seeing things in all the sentiment in the company that are causing us to come down. Now, again, when I look at the charts, to me, it's sort of just like a guide map for what could potentially happen in the future. And then I look and say, hey, this is what we could see going down. Do we have the sentiment and the macro environment that are kind of ripe to cause us to come down to those levels? We need a catalyst that's going to cause the information we see in the charts to actually come to fruition. So right now we are seeing that. We have that potential. We have those gaps down below us, and we do have the company sentiment and the macro environment that are causing this to all happen. Now, again, those gaps above us, eventually you're going to have the Fed pivot on those interest rates, and we're going to have positive sentiment come back to the company. That is going to be what drives us back up to fill those gaps. Again, it's those three big pieces that I put together that kind of give me guidance as to where I think we're going to be going in the future. So hopefully this video helped you guys out. I know I had a lot of questions, and sorry for being away for so long between my son's soccer schedule. And yes, they're in the tournament. They are seeded number 3. They won their first game. They're in the semifinals now. Then we go on to states. Things are still very busy for me. I still have a lot of unpacking to do. I've got a lot of things going on, but I'm going to try to get on here for you guys to at least get you some information as often as I can until I'm fully settled in here. So thank you guys for your patience. Let me know if you have any other questions about what's going on with gaps, other things that we're seeing in the charts, other sentiment, other news that's out there. I'll still be able to answer all the questions that you guys have. I'm on X, I'm on Facebook, I'm all over the place. You guys can find all those links in the description in my channel here. Otherwise, thank you guys so much for watching. I appreciate all of your support, and I truly appreciate all of your patience. We'll see you in the next one. Have a great one.